Bell rolls is the reporter thrown into the secretive world of the Forex Super Model, where nothing is as it seems. Beware the techno monk, and steer clear of Professor Code and his two assistants. Give the senior trader a wide berth, and don't expect any sense from the risk manager.
Hello, I'm Professor Code. This is the Forex Super Model weekly review, which is a combined review for the data cycle and the flow cycle for Monday the 19th of the 7th to Friday the 23rd of the 7th 2021. We've written up the weekly flows to get us underway. We're going to start this to save time, so let's make a start then. So the week Monday the 19th to the 23rd then, euro dollar minus 38. So over that period, the euro dollar as an FX pair lost minus 38 points or pips. Euro yen plus 10, euro pound minus 10, pound dollar minus 26, pound yen plus 39, dollar yen plus 47. If you plug that in, then you get an opposed positive driver in the dollar at plus 111. Front and back door flows mainly coming out the yen at minus 96, out the euro at minus 38, and the pound is the positive rock at plus 23. Activity plus or minus 134. So throughout the week, then we've had the dollar driving positively, the opposing negative flows mainly coming out the yen, a little bit out the euro, and the pound has been getting backdoor flows to prop it up plus 23 on very low activity level because the markets returned back. Anyway, we'll talk about that in a minute. We'll stop it now and move on to the asset classes, so don't go away. Right, welcome back. We've written up the asset classes. So US dollar index then, so it's broken, it's gone up high, it's come back a little bit. So the dollar index, the dollar complex as a whole in the majors at least is very high. Gold won't be liking a strong dollar, and it's come down. It's 0.45 from the high, so it's just above half marks. Oil had this big pump up, came back, and it's now recovered a little bit. It's 0.3 from the high. Wall Street has got this sort of triple top look about it. It's right up there, right up at the triple top. S&P then has got this break. It's above its previous high. Likewise with the tech. So and US 10-year. Remember, this is the price of the bond. So the price went way up. It's come back a little bit. It's thinking about going back up now. It's 0.27 from the high, and the bond. Likewise, this is the price. So the price has been going up. The yields have been weak, and it's plus 0.26 from the high. So it's 26% above the modelled high. Right, copper. Copper's finally broken out. It's plus 0.20 from the high, and US steel still dirging but come back a bit. 0.30 from the floor. Right, stop it there, and then we'll look at the data cycle and do the final analysis. Right, hello again. Let's have a go at the data cycles now. So China then. This is basically neutral to slightly positive. The dollar is neutral to negative. Germany is pretty much neutral, as is the EUR is neutral. Let's go over as the 27 nation block. Let's go over to the yen. The yen is positive. The pound is neutral. The CAD is positive, neutral to positive. And the AUD is excuse me, is negative, and the NZD is positive, and the Swiss franc, the chuff, is neutral to negative. Right, so what have we got then? We've got a lot of neutrality in the data cycles. The interesting thing here is that the dollar, the USD data cycle is starting to come off for the first time since April, so that's pretty negative. New Zealand dollar is a bit of a standout on the up there, but New Zealand is pumped, and and the Australian dollar is. These are all very marginal. These data cycles. They're sort of neutral to positive, neutral to negative, neutral. So there we go. So just to remind ourselves what's been knocking it about, or going to knock it about next week. Well, the key event really is Wednesday, the 28th of the 7th next week, which is the Fed's rate decision. So that's what we're going to be aiming for next week. Now let's just get rid of this and look at what's going on. Our trades, well, we've managed to scale. We've scaled back into so euro dollar. We've scaled up on that. AUD NZD. We've had a go at that again. We're short USD dollar against euro pound AUD, and we're short NZD against euro pound CAD NZD, AUD. Now those have been very problematic recently due to the dollar strength and the New Zealand strength, and we've been shorting both of those complexes. So that's been difficult, but we're starting to see this shift now. Yields are coming off in the 10-year and the euro zone, and you're getting this divergence between the dollar and the bond market. We're getting this weakening and general negativity in US data, and that is, in the short run, is being taken as positive, because it means it's less likely the Fed's going to do all this tapering, which they never were, quite frankly, anyway. Inflation is starting to roll over, and arguably the Fed were correct in its transitory nature. So it's looking like it's a short window of stimulus in an environment which is favourable to equities, and it won't be favourable to a strong dollar. And yet we have a strong dollar at the moment. So there's going to be a massive ruck in the market shortly. And if you're long dollar, you need to watch out. And that ruck is going to create risk off. We're going to get a pump up in equities probably, and then you're going to get an almighty thump down, which will hammer the commodity currencies, particularly the NZD, which is way out of line, and we're shorting the NZD. So we'll see how we go anyway. Next week's going to be interesting, and as they all are really. So thank you for watching, and see you Monday for the daily briefing. Thank you.